Okay, all right. So in our previous video, we have discussed about prepaid expenses, but in this video, we are going to discuss about accrued expenses. Accrued, it means in other way you would see, where payable expenses, which we'll call it as a accrued expenses. Payable, it means which is yet to pay. So in Hindi, you would see like udhari pe rakhna, udhari. So which you need to pay in future. All right. So same expenses you would see in fund business as well, where expenses like admin fees, management fees, incentive fees, legal expenses, auditing expenses, or there would be again other expenses or categories as well, where fund manager they'll ask you to accrue it or record it as an accruals, so that you can in future basically you can uh, accrue it and then notify to the, let's say, counterparts, or maybe investors or different counterparts, or maybe fund managers also as an accountant, you can notify it, so to make a payment of those expenses in future. But yeah, so for NAV computation, you would see payable expenses are also a very important task that you need to calculate or compute and record it in the books of account. So how those expenses works, basically I'll tell you. So let's say you have a cycle, January, Feb and March. So for every month you have expenses of, let's say, this one, which is 1200. So you need to, as an accountant, you need to record expenses for 1200, 1200, 1200 for every month. So it means at the end of the January you will have to record the accounting entry for 1200. And how you can record it, see this. So let's say the admin fees, which is basically payable. Admin fees, which is basically payable. Admin fees. So now you can record the expenses. Admin fees payable, account debit to, sorry, my bad, not payable. At the time of cash, we can record it in this way. Now admin fees expense account debit to payable account credit. See, payable or accruals, that you can record it, and expenses. So in the month of January, you can record it 1200, 1200. So this is how you can prepare accounting entry in the books of month in January. Same treatment you can apply it in the month of Feb as well. Same treatment you can apply it in the month of March also. So it means every month you can record expenses, which is 1200 in the books of fund as an accrual, or I would say payable expenses, because these expenses fund manager will process or make a payment and they'll notify you. And once they notify you, of course, then you can refer the same documents to convert that payable into cash. Or let's say assume it. So in the month of let's say Feb, right? Same January month's expenses in the month of Feb. Let's say after mid Feb. So fund manager confirm it. Fund manager process payment of those payable expenses. Then your accounting entry would be payable expense account debit to cash, right? Cash account credit 1200, 1200. So this entry basically for when expenses settled in cash, then you can record this transaction. And this entry basically for when accrue expenses. When you accrue, you can record this accounting entry, and when you settle, then you can record this entry. So this is how we record transaction as an accrued expense in the books of fund. So I'm sure in your interview process, you would expect questions around it. But if you can prepare a few examples, small examples, then you can easily answer to them. Especially Apex or Sitco, they ask questions around journal entries because they have a fund business where most of the uh, most of the accountants, they manage day-to-day expenses of the funds, and that's what they ask questions around it. Again, apart from this, how we can shift, or we can set schedule in the funds. Say this, you would see schedule where we prepare on, and we also update it in the books of fund. So you would see system like Geneva, Investron, we actually set up the schedule at the time of, or when you accrue the expenses, your accounting entry would be expense account debit to accrued expenses. So every month you can prepare accounting entry this, and when you actually settle payment in cash, then accounting entry would be accrued expense account debit to cash. So yes, so this is how we prepare accounting entries and record it in the books of account. Same normal, in normal business also you would see the same, where debit expenses, credit accrued expenses, credit expenses to debit accrued expenses to credit payable if you want to convert it into payable, and then payable to cash when you actually process payment to the counterparts. All right. So now I'll give just one question so that you can practice it and post your answer in comment section, because this question was asked in FX interview. Let's say actual payable actual payable actual payable which was recorded to the account for 12,000 rupees, but fund manager paid this. So this is the case where, now tell me, journal entry in the books of fund. Give a try. You can check it on internet as well. All right. Give a try. Try it how we can record this accounting entry, or what would be your different assumptions and all. Don't worry, I'll resolve this first in my next video because in my next video I'm going to discuss few practical scenarios or questions around accrued expenses which has been asked in the interview process. I'll explain that, so don't miss that. Please click on bell icon so you will get notification, so you can watch that as well, and you can share this content with others also. All right. So try this question and post it in the books of try to practice it and post your answer in comment section. We will see you in next session. Thank you very much.